What's up guys, welcome in a new video. Today I'll be explaining liquidity zones. So supply and demand, this is how I base my technical analysis. Keep in mind that you can't trade based only on liquidity zones. You should have at least one more confluence before opening anything. And in this video we'll be talking about how do I draw those liquidity zones, how do I trade, how do I use them, and what are those liquidity zones. So let's start by explaining what are the liquidity zones. Liquidity zones are pretty much areas where market makers or big buyers tend to accumulate orders, and areas where the price reacts or usually reacts. The point is that we are expecting some reactions in the market. Like in this case, price hits the liquidity zone and reacted very quickly. We don't want to see this kind of price action. This is where the liquidity zone gets invalidated. Alright? So we want to see always sharp reaction, good reaction, price reaction, wicks on the liquidity area when we put our orders and where we fill our orders, and then immediate reaction, price reaction to it, and deviation. All right. So how do we exactly identify liquidity areas? Well, we have four types of liquidity. The first one will be rally based rally, and the liquidity is on this point right here. In this case will be this red candle, and we take the body and the lower wick. We take a bit more because we take the wick of the next candle if this wick is higher than the previous one. Then we can have drop base drop, same thing as before. We take the green candle, in this case the body and the wick. If this wick will be higher, we take this wick too. And this will be the last two types of liquidity, top and bottom type of liquidity. Here we take the red candle, body and lower wick. Here we take the green candle, body and upper wick. As you can see, these liquidity zones get pretty high value. Now that you know what liquidity zones are and how to chart them, let's take some real examples. So, first thing first, let's explain inside two areas of liquidity what price can do. And there are multiple options. First, it's a clear bounce, something like that, and will be a deviation, all right? Will be, in most of the cases, just a wick. This would be a retest and will be even better. And we can have a fake out, which can be the same scenario as the first one, just waking up to the liquidity zone, maybe even closing a bit above of the liquidity zone, but still breaking down. And then we have this kind of price action, which is a breaker, represent a breaker, a retest below, on top of the liquidity, and then price is gonna continue higher. Same thing when price get down, same kind of reactions, same scenarios, and retest, drop. This is what we are looking for, all right? So first thing we're gonna do when charting, go on higher time frame. Let's actually hunt for some liquidity areas in this area right here. So we will take that as main area, this green candle and the wick. All right, this will be on 4 hours. So let's see how it performed. Pretty good. All right, let's mark this. All right, and let's suppose we are here in the price, right, around 22k, the first time where it touched 22k. Let's get rid of this, we don't need it anymore. Let's get rid of that also. Now we have to look for a liquidity area. Let's suppose we are right here. We have to look for a liquidity area on top of that. So let's go back and we will take a candle from around here. So in this case, this one. All right. Now we have a range where price bounces inside. All right. Let's go on lower time frame, like 1 hour, and let's give it a look on those liquidities. Let's see if we can get some confluence. All right. Like in this case, we don't need that much. We're gonna take only that, and here so far we're gonna take only that. So now we have much thinner liquidity zone. How do we trade on that? All right, so supposing we are here, what we are looking is firstly a retest. Retest, green candles, clean retest. All right, this could be even a retest. So we're looking for longs on that area and on shorts on that area for this kind of movements. All right. So I will be placing 2 orders, one of in the middle of this liquidity zone right here, shorting, and one long order on this liquidity zone here, longing, right? So let's fix them up. All right. Those will be my 2 orders. Now let's see how we build them. First thing first, remember to use money management and risk management. This is fundamental. So let's suppose we are using a 10x leverage. We're gonna go for a 2% stop loss. Right here, same thing here, 2% stop loss. We target as our TP the other liquidity area. In this case will be this one, and here this one. All right, and let's see how those will play out. This will be filled right here. You could have a lot of time to fill. All right, even here you will get filled. Stop one trigger, and here's the take profit. Here on the take profit also opens the short position. All right, let's see the short position. Take profit right here, and here again another long position. 2% stop loss, same thing, same exact thing. Yeah, you can always put your orders in the middle of the liquidity zone. You can put your order on top, on the middle, or on the bottom. I prefer to put them always in the middle, as you can see. So 2% stop loss from here. All right, targeting the upper liquidity zone. We got the take profit. Here on the take profit, same story. Short position, 2% stop loss. And we go for the other. And we go on until we get a breaker. Like in this case, on this short, it will be stopped out. And this is not really a breaker. I mean, this is a breaker. We get even a retest. You can long on that, but you will get stopped out because we get another breaker breaking down again into this liquidity zone before price moving. So even just simply trading on the liquidity without any other confluences, you can add some more confluences. Like in this case, like you see here, rally base rally. This can also be a liquidity zone. This one, or actually this one. You can take this one. Let's change the color to white. And put your orders on this one. It's even better, as you see. Only wicks. You have 3 times where you can open your order. Same thing. You get a better entry. The more you scale down to the time frame, if you go on 50 minutes, it will be even nicer. The more you scale, the more accurate you are. But try always to start from higher time frame and then scale down. Yeah. In this case, it will be the same because the liquidity zone is already pretty thin. Do that when you get a big liquidity zone like this one. Once it's like that, you're pretty good to go. Remember money management, risk management, and as you can see, when trading, with liquidity zone, I usually take only trades that have a risk to reward bigger than 1.5. So in this case, even if I would be stopped out, if I lost 2% on just one trade, I will get 1.5 the amount of money I lost on that. So this will be two wins. Two wins can pay you off for 3 losses, and you can have even a win ratio which smaller than a 50% still being profitable. And as you can see, we clearly can have a bigger win ratio. So it's pretty good. I will make some more videos on that. This is the basic of my analysis. On top of that, I use many other things which I will explain in the future. We will get some more setups, some more things to perfectionate our analysis. Hope you guys enjoyed the video. Remember to like and subscribe. You can check all of the links down below. You can join our free Discord. It's totally free. Awesome community. Check it out, guys.